Okay, the crypto market's in a really interesting spot right now, mostly because the panic is at one of the highest points I've seen in a long time, but on the opposite side, nothing really even happened. What I mean with that is if we take a look at CoinMarketCap, yes, Bitcoin is like at 97,000 and many of these alts look like they're bleeding, but specifically the last 1 hour or so, again, some coins have been seeing a little bit of a fall. Matter of fact, Athena is down 7.5% in just the last hour, Phantom down 4%, just a lot of carnage all around, but generally, in my opinion at least, there's really no big basis for everything happening. For the most part, it seems the Fed is still the underlying cause, as you can see on the top right as well, of every single thing happening in crypto here. But in no way, shape, or form do I believe the crypto bull run is over. Markets are panicking after Bitcoin fell from 108 to 96,000 in 48 hours, but don't be fooled. The market panic is overblown. Bitcoin is down 10% after a 54% pump in 40 days. This isn't a crash, it's a healthy consolidation in a bull market. I mean, if we take a look at this from the weekly or even monthly perspective, really, it doesn't actually look like we've crashed at all. This is the monthly chart for December, right? Does it really look bad in your eyes? I mean, if we look back, there's been multiple months in the past where you see some pretty big crashes. Then again, what I will point out though, is that generally speaking, after the halving, you don't really have an entire monthly red candle. You have a lot of negative price action, but we have another 1.5 weeks or so to actually set this straight. There's a good chance that even if we go down further and we continue on like a December 2020 or perhaps even a January 2021 or maybe even a February 2021 where there was a lot of price action throughout the month, that we actually end up back in some sort of positive, some sort of green. Let's zoom out. Key support levels that are remaining intact right now are the weekly 21 exponential moving average at 79,000 and the daily 200 exponential moving average at 73,000. Even a wick to these levels wouldn't even break the bull market structure. So even if we were to go down all that way, really things wouldn't even be that bad just quite yet. Higher highs and higher lows are still forming as of that point. So why exactly is there panic then? Well, it's being said that it's all because of the FOMC meeting announcements from 2 days ago. Powell's hawkish tone delayed the money printer's quantitative easing, but the big picture hasn't really changed. The US economy is stable, with unemployment dropping from 4.2% to 4.1% in recent months. We're far from a recession, a key risk for crypto, because people want things to be bad. Now, that is actually debatable, that comment, I'd say, but let's break down the data. So the Fed cut rates by 25 basis points as expected. They'll pause rate cuts in early 2025 to monitor inflation. Inflation is 2.75%, higher than the Fed's 2% target, and I believe they said they will only reach it in when? 2026? Unemployment is stable, signaling economic resilience. Slow rate cuts aren't bearish, they are a sign of stability. Now, let's see, wait, it's getting stuck. Oh, I think we're good. I want to say now, talking about stability, this is the Ethereum chart here. This is the daily Ethereum chart. I just wanted to quickly bring to y'all's attention that if your portfolio right now is hurting, you're not loving this right now, none of this is being loved by you, just know that throughout this endeavor, over the last few days, you could have actually been buying the dip and flipping it for a ton of profit on almost any coin, I think, except for Ethereum. I mean, if I'm looking at it a little bit more clearly, there have been a few opportunities here. The price went up for like 5-6% or so. From this bottom, it went up, 4-5%. But I will say that coins like XRP have been way easier to spot and trade as the levels are way more clear. But the downward structure, for the most part, has not been broken and will only get broken. We just bounce before like 2.14, 2.15, something like that. But as of this point, the last 1 hour, we are pushing down significantly hard again. Even though things looked like they were recovering, they looked quite good. Just over the last hour or so with XRP, we are again down 2.5%. And this all brings up my earlier point of, you know what? I think if we just ignore slightly a lot of the short-term temptations to get overly dramatic, get overly pessimistic, and take a look at the longer-term picture, even if prices, like I've stated here, right, were to do a little bit of this, we'd still actually be completely fine. It's for the most part just people's fear that we're going to go down to zero or whatever. But I kept saying, if you believe this crypto stuff is not going to last, then is it really a good industry for you? I don't think so. Having said that, I want to quickly talk about a very interesting project I've come across recently that's called Parallel AI. It's a project that secured some partnerships with some of the biggest deep in AI projects. And the idea is basically as follows. You can read it right here. Unleashing the power of parallel processing to slash computation times for AI developers by up to 20 times. And I think the idea is quite logical. If you can make things work parallel, you can get things done faster. Anyway, so in the AI/GPU space, this could obviously be an absolute game changer. Hence, I think they've started on a pretty good journey of getting more holders, more people in the ecosystem. And every single part of it is powered by their Pi token, which is listed on MEXC and I believe a couple of other places. But they basically accept the Pi token in their ecosystem for payments. And they're hoping that this can basically become like a central currency or even universal currency for GPU procurement. And I mean, if you start thinking about it, this entire industry is what? $1 trillion? I'm talking about the parallel AI industry, or parallel processing, I should call it. And so the fact that these guys are first to do it, they got the first mover advantage, could be pretty huge. Because again, there might be many parallel processing ones, but are there many decentralized ones? No, I've never heard of one. Anyway, so if you're looking for another /AI gem that potentially is extremely undervalued, again, no guarantees, but this is a very interesting one. I'll leave a link to their Twitter down below. Could be pretty big, I'm just saying. Should just quickly add that since I found out about them about 2 weeks ago or so, they've done a lot. New exchange listings, new partnerships, a lot. Which is very, very good for these crypto projects, they're actually making steps. And that brings me to it. A lot of people do not realize that many altcoins right now are just emotions and not fully based on news or how the value really should be. The more bullish the Bitcoin market gets, the more crazy the altcoin market gets. Bitcoin dropped 10%, but almost all altcoins fell like 20 to 30%, but this is normal. So if you're questioning, this is completely normal. But if Bitcoin drops further, altcoins will probably follow, so use this time to focus on high conviction projects and just buy things that really you got a high conviction for. So this guy says, avoid some of the riskier topics. Be prepared for Bitcoin to drop 10% or altcoins to drop 20 to 30. Focus on the long term. My thoughts are, but you guys know I trade every single day, right? My thoughts are that if you really believe things are going down, you can short it. If you're looking for a platform to trade, I've got a link down below to Bluff, and you can use it from anywhere in the world. You might need a VPN though, and make sure you press that like button if you haven't done it yet. It's the uncertainty that counts, right? We don't know where things are going to go next, and in that instance, since I'm not sure, I buy. But what I do believe is that every single time you look back at the dips, you're like, ooh, I should have actually bought harder. And so with leverage, I also buy pretty significantly. But, and here's the key point, you gotta make sure you've got some leeway, right? You gotta make sure you won't get liquidated on like a 10% move or something, because sometimes it's fine to have a very, very low margin of error, either when things are pumping really, really hard and you're trying to catch an up move to go even more up, or if you're buying a very, very specific dip. For example, in this instance, you are catching your XRP bid at $2.159, and your area of problems would start at $1.99, for example. It's still risky because recently, can't show you real quick. Recently, we did go below it in terms of price, like right here on December 10th. We did have a little dip below it. So from that perspective, is it risk-free? No. But in that instance, if you had opened a position, this is kind of annoying. I want to say if you open a position at like $1, let's say 19, for example, and your stop was at now $1.99. You got stopped out. If you then again bought back at $1.89, trying it again, now as at this point, you would have had immense profits because that's up 430% if it's like a 10x trade, for example. So there comes the issue of, well, if you just have a long enough breath and you can, again, if you get liquidated or if you got stopped out because your place is stopped somewhere, you could have been able to just double down at some point. And again, that might have still not worked, but then think about it for yourself. At some point, it has got to bounce. So if you've got a long enough breath and you can buy your way down, you should, theoretically speaking, be fine. It's just the midst that might get really, really somber or annoying. Historically speaking, the best gains come during periods of uncertainty like this. After the FOMC dust settles, here's what to expect. And to that, I will say nobody really knows for sure. At the end of the day, literally both sides, in my opinion, are as equal. Partially because there's so much fear going around because crypto is up so much over the past few weeks that some people are saying, no, we need to actually stay around these levels, stay a bit uncertain, stay a bit down. But the last time people said that, we shot up like crazy. And I had a sheet open, but I closed it for some reason. I want to say the best opportunities are usually when things start falling down and people get a little bit cranky, a little bit panicky. That's usually where most money is made. I'll tell you real quick. So again, if you are a person that's really risk averse, you're probably not loving this right now. But on the opposite side, if you're a person looking to make crazy gains throughout a bull market, this is the time where usually it gets done. I mean, just looking through it, man, there's a lot of crypto liquidation over the past day. The number is pretty high. I mean, it doesn't look that high just on this map here, but we all know it's pretty damn high. But that's the funny thing. Bitcoin is still so incredibly high, like at what, 97 or so, 96.5 thousand, something like that. So liquidations were, again, the second highest level since the 9th of December, the 9th or 10th of December, which are, again, the second highest level in many, many, many months. So it was completely carnage for everybody. But it's also because many right now are quite certain that this is where the run is really going to change. It was kind of funny, though, that earlier we covered that the Ethereum shorts were at an all-time high. And then Ethereum shot up to 4150 or whatever. And then right now it's back down to 3300. So a lot of people got wrecked on that ETH move up. And right now, if they had kept up and shorted even more, which some did, at 4100 as well, instead of just 4000, they would right now be in tons of profit. But that's the funny part. They'll try to shake you out. They'll try to wreck you because at the end of the day, that's how they make money. But I'm never giving up. And we know underlying right now, it's a lot of macroeconomical fear, but for the most part, right, what happened just yesterday night as well, the SEC approved the hashtag NASDAQ Bitcoin and Ethereum Crypto Index Fund, or Index US ETF. Realize that the progress is not changing. Yes, these ETFs might sell a bit in the midst here, but we know they're generally speaking buying because they know what they're buying for. Don't get shaken up because of small moves like this. It might be scary, it might be annoying, but you know what you're buying in for. And as of this point, things are still looking extremely good. But yeah, that's about it for this video. Make sure you press that like button and let me know down below if you're afraid or just buying the dip.